Hi, my name is Michael Zhao from the research team at Grayscale. Today we're going to be looking at Ethereum, the first big smart contract blockchain and why it still matters in crypto. We put together a detailed report to cover Ethereum's place today, how it earns money, where it's headed, and why it's key for investors. Let's jump in. So Ethereum leads smart contract platforms. It's got a huge market cap, tons of apps and developers, and lots of on-chain assets like stablecoins and tokenized items. We think its strengths, such as being open, safe, and fair, keep it strong. It'll hold on to users, developers, and fees, even as rivals like Solana pop up. That's why we see Ether or ETH as a must-have in any crypto mix. So how does Ethereum make money? It's all about transaction fees, called gas fees, or payments to send transactions or use smart contracts. On the layer 1, fees split into two parts. A base part that gets burnt, which shrinks ETH supply, and a tip that goes to validators who keep it secure. So we believe these fees could jump from $1.7 billion a year, where it is currently, to over $20 billion a year. What's the outlook? Well, it's hard to predict with such a young tech and tough competition, but picture layer 1s at around $5 per transaction and layer 2s at around 5 cents per transaction. With more capacity, like 100 transactions per second on the layer 1 and thousands of transactions per second on the layer 2, we believe fees could hit $20 billion if ETH scales well and keep users hooked. So to grow these fees, Ethereum scales with two layers. The first being the layer 1, which keeps things secure, while the layer 2, like Arbitrum and Base, handles fast and cheap transactions. Layer 2 fees are lower since they lean on the layer 1 for safety, and they've taken off lately, handling more transactions and more users thanks to the Dencun upgrade, which cut data costs to layer 1 by 90%. This shift helps users, but lowers layer 1 revenues for now. New updates like Pectra in April 2025 and full danksharding later should boost capacity by a lot. If Ethereum pulls this off, it could stay ahead. Price-wise, Ether's been very weak lately on a relative basis. Bitcoin's market cap increased by 1.35 trillion since late 2022, while Ether's only been up $90 million. Solana's up around 18% in 2024, but Ether's down 18%. So it's fallen behind Solana in terms of fees and activity too. So we see this as the market eyeing the basics. Solana's fees grew while Ethereum's dropped, matching their price shifts. Still, the smart contract field is growing, handling around 1,200 transactions per second now, up from 20x 5 years ago. Though this is still far from Visa's 7,400 transactions per second. This shows big potential, and Ethereum's set to grab a good chunk of it with its strong base and network power. So what's driving this potential? We expect smart contract apps to take off in the next 1 or 2 years thanks to the US rule changes. The Trump team specifically has made crypto-friendly moves, setting up the industry to grow. For example, the new Senate bill, the Genius Act, wants to clear rules for stablecoins. Clear rules means more investment and more blockchain use, which helps Ethereum. With its big developer crew, heaps of on-chain cash, and open design, it's ready to shine, especially in decentralized finance. To wrap up, Ethereum is a key player in smart contracts, backed by its strengths, scaling plans, and rule changes. We believe its fee-earning ability and its network effects will lift ETH's value over time. So for more information on this topic, please visit grayscale.com/research. Thanks for listening.